Hey guys, what's going on? Welcome to the video. So we've had an eventful start to the year in the stock market. In this video, we'll be going over the market pullback and where that could bottom at, along with a bunch of individual stock trade ideas for the month ahead. As always, there are timestamps in the description, and let's go ahead and get into it. Starting out by taking a look at the S&P futures chart, what has played out so far is a break above and then fail back below of the previous all-time highs at 48.08. So we talked about this a couple weeks ago as being a likely scenario, as sellers want to trap as many buyers as possible to start a pullback. So for example, some traders enter above 48.08 for the all-time highs breakout, but then if it fails back below there, all the buyers who entered above 48.08 become trapped and liquidate positions on the way down, which then adds to the sell. So on Friday, it potentially put in a short-term bottom off 47.10, which is another key level that I've talked about, as this was the breakout trigger from the December FOMC meeting. If we take a look at some scenarios I went over a couple weeks ago, the first is very similar to what has played out so far, with an overshoot of the all-time high, followed by a pullback to backtest 47.10, a bounce there, and then a little further downside to backtest the long-term zone before finally bottoming around there. The second was if it backtested 47.10 before new highs, then it would have been more likely to hold there and make stronger move to new highs in result. But of course, what we saw was that break to new all-time highs first, and then the sell began. So my opinion now is as long as Friday's lows hold, this has a good chance to be a short-term bottom off 47.10 and could easily see a rally back up towards around 4800 next. The upside trigger to watch will be this white trendline on the chart. If it's able to break and hold above that, it can start a nice move higher. Following that rally though, I do think it is pretty likely for more downside to follow, like that scenario I went over a couple weeks ago, before putting in a real bottom and continuing towards new highs. So the key trigger points to watch in the week ahead will be Friday's lows, which can continue down directly on a break below there, or the trendline above, which can trigger upside likely towards 4800 next on a break above. And if we take a look at a simple visual of the SPY, the previous breakout trigger from mid-December on it was 459 to 460. So this is a very well-defined zone, and breakouts like this tend to get back tested as new support. So just a simple textbook way this could play out could look something like this to backtest it. Alright, so now getting some individual trade ideas, starting out with Apple, ticker symbol AAPL. So Apple had a pretty violent sell last week and is now testing the 180 key level along with the 200-day moving average, which line up to make a pretty major support level. Historically, we can see that Apple will have very strong reactions when testing the 200-day moving average, so when the trend is up, it usually either bounces right off of it as support, or can have a quick undercut below and then reclaim back above, which will often trigger a strong rally higher following that. Along with this, it's also oversold on the daily RSI. I marked each time that it's been oversold over the past couple years, and as shown, a sizable balance will often follow that. So to trade this with small risk, the way to do it is you want to play it off 180, so entering at or near 180 and playing with a tight stop loss below there, where you're only risking a fraction of a percent of equity. Another way to do it is like we've seen in the past sometimes, it will undercut the 200 moving average and then reclaim back above. So let's say you enter at 180, then get stopped out of your position because it breaks below. After that though, it ends up reclaiming back above the 200-day moving average, which is then your re-entry signal, and you can play the same stop loss as before, and then hopefully ride that trend back up as long as that 200-day moving average does hold as new support. And the levels above / upside targets for this would be at 181 to 181.5, 182, 182.94, 185, 186.5, 190, and then the 191.71 gap fill. So next up is Nvidia, ticker symbol NVDA, which is looking pretty primed for a breakout and leg higher soon. So the key pivot zones that I'm watching on this are at 474 to 480 support, and then 500 to 505.5 resistance, which would start an all-time high breakout above there. I know a lot of us think that Nvidia is pretty overvalued, but that really does not matter because the stock can go as high as it wants in the short / midterm. It has continued to hold up well during market pullbacks, and the semiconductor sector continues to lead the market. A simple way to trade it can be to enter if it breaks above highs at 505.5, and then play it with a stop loss back below 500, so you're just risking about 1% on the trade, and if it follows through, you can ride it up to new highs. Next up is Supermicro Computer, ticker symbol SMCI, and this is another stock in the semiconductor sector. So this stock has been consolidating within this range since July, and I continue to think a large move is on the horizon. 298 to 317.5 is the key resistance zone that needs a break and hold above to trigger the breakout and leg higher out of this range. It has made a couple of attempts to do so and ended up failing, but I would guess that the next time or the time after that, it does follow through, which can target the 341 gap fill and then new highs above there. There is just a ton of built up energy in this stock and setup, and if it's able to make that break, has really massive upside. Amazon, ticker AMZN, is another at the top of my watch list for the week ahead. So this 143.6 to 145.95 zone has been the key pivot zone for years. As we can see, it held as key support in 2020 and 2021, and then held as key resistance in 2022 and 2023. Before a breakout in December, and now has come back to backtest it as new support. Along with this, it is also testing the 50-day moving average, which as we can see, the stock has reacted strongly when it's been tested historically. A pretty simple trade idea overall here. One could enter it and play it with a stop loss below 143.6 and look for it to hold here, or if it fails to do so and break below this zone, it's simple, just wait to see if it reclaims back above, and if so, re-enter with the same stop loss. And one more is DoorDash, ticker symbol DASH. And this is overall just a great example of what you want to look for on market pullbacks like we're seeing right now. So a stock that has had high relative strength versus the market, it then pulls back like Dash is doing now, and then you look for it to hold at a key level. In this case, it would be the 50-day moving average and the 92.5 level. If there's a stock you've been waiting to get into, you don't want to chase it on the way up. Just wait for a pullback like this at a spot where you can set tight risk with stop loss, and then if it holds, you have your position at a much better entry point than if you were to chase it when it's heavily overextended. So that is everything that I'm watching for in the week ahead. This market pullback is very healthy to see, and we'll see where it goes from here. Thank you guys for watching, and for anybody interested in joining the private Discord chat, that is the first link down in the description to get my personal trade alerts, nightly watch lists, and I answer any questions you have in there. I'll catch you all next time. Good luck trading this week, and peace out.